back to the American Dream Real Estate. I'm your boy Dudley, right? And today I'll be sharing 5 things that's going to help you qualify as a real estate professional. Now, some of you guys might not be in the real estate industry, so just bear along with me. Today, I'll be talking to my real estate investors, real estate professionals, and we're going to talk about 5 ways you can qualify as being a real estate professional. So real estate professionals, we want to understand firstly why it's important to become a real estate professional, right? Section 463 of the Internal Revenue Code says that all rental real estate activity is seen as passive income. That means that we can only offset our passive losses against passive income, right? So that kind of makes it a little hard for people who are doctors, lawyers. They have a high salary, they have W-2 income. That is seen as active income, but they have real estate property where they want to use some of their passive losses against their active income. So becoming a real estate professional allows people to do this. So just breaking down 2 scenarios here. So if your modified adjusted gross income is below $100,000 for the year, you get to offset your passive activity losses against up to $25,000 in passive income from your active income, from any W-2 income that you might have, right? So this is if your modified adjusted gross income is below 100K. You get to offset, say it again, your passive losses from real estate activity, and you get to offset your active income. So pretty much $25,000 reduction. Pretty sweet, right? It starts to phase out as you go above $100,000, and it completely phases out once you reach 150 and just earn income for the year. That's your W-2 income. So it starts to phase out at 150, right? So again, our second point that we want to make with understanding why we want to be a real estate professional is to qualify as a real estate professional. That way, all of your passive losses can be offset against your ordinary income, right? This is people who are like real estate agents, real estate brokers, landlords, people who are heavily in a real estate trade or business. They get to use all of their passive losses from all of their activity, and they get to write it off against all of their ordinary income, because the majority of their ordinary income is through real estate, right? So the second tip that I want to share with you guys is how to actually qualify, right? So there are 2 things we want to be aware of. We want to spend, if we want to qualify as a real estate professional, we want to spend 750 hours per year. That's about 2 hours a day in a real estate trade or business. It could be anything, selling houses, listing houses, short selling, doing wholesaling, anything in the real estate trade or business. You have to do 750 hours per year. And you must materially participate more than 50% of the time during the year in real estate trade or business to qualify, right? So that sounds good and dandy. 750 hours per year, and then I must materially participate more than 50% of the time. All right, that's easy peasy, right? But our third tip is we have to demonstrate material participation. Now, there are 7 material participation tests that we kind of have to meet that requirement, but we only pick out 2 that we kind of see with clients that will kind of encompass, get them through, right? So in order to demonstrate material participation, we have to document at least 500 hours in real estate activity. So that means documenting whether we work on the building, we fix a fence or something like that. We actually working in the real estate trade or business. Now, this stuff doesn't include like sending emails or just making calls and stuff like that. So you can't really include stuff like that. You have to physically be working in a real estate trade or business for these to demonstrate material participation. Or, so they have the 500 hours, or you can have 100 hours of documented material participation, but you must spend more time than any other individual. So say if you hire a contractor, you must spend more time than them on your properties, right? You gotta spend more than 50%, like this said, more than 50% on your real estate trade or business. It can be a contractor or anybody else that does more work than you on your trade or business, right? So that's the third tip. You have to demonstrate material participation. Now, the fourth tip here is it comes in and tell when we look at all these hour requirements and material participation, right? We want to meet all of this stuff. But the law says, the IRS code says that this is only going to qualify for each rental property that we have. So we have to meet 750 hours per year, 500, or you do 100 hours, right, per year for each property that we own. Now that can get crazy. It's kind of not possible to do. So the great country of America allows us to do something called group aggregation, right? So once we make, turn that off right quick, my phone's going off. But once we make a group aggregation, right? So we take all of our real estate, our properties, and we group it together, called group aggregation, right? And that will be seen as its own portfolio, right? So we only have to meet these requirements, how to qualify for the hours, how to demonstrate material participation, right? For the whole entire group of our real estate portfolio, right? Now, this might be a sweet deal to aggregate all of your properties together, but we have some clients who get in here and they sell off one of their properties out of the group, and they recognize the loss. But the loss is kind of get confusing on to recognize that one loss from that particular property that came out of the portfolio because the whole group is not showing a loss, right? So it gets kind of hairy when it comes to group aggregation, but it is a tool that we can use so we don't have to meet all of these tests for each individual rental property that we have. We can group aggregate it together. Then the fifth and final tip for you guys to become real estate professionals: you must issue 1099s to each contractor or anybody that you paid over $600 to during the year for your real property activity. This excludes corporations, right? Unless they are medical and legal. So you must issue 1099 to each contractor you pay over $600. And it's as simple as that. So go ahead and reach out to us if you guys are like, man, it's December, I think it's December 11th today, and I want to be ready for 2020 tax year. So go ahead and reach me at dudleyaccountingservices.com. We specialize with real estate, and we love real estate, helping you realize the dream, the American dream in real estate, and that's what we're all about. We're a tax and accounting firm, so reach out to us at Dudley Accounting Services, and we can get on the phone, answer any questions that you guys may have. All right, that's been another one for me. See you guys next time. Peace.